Let's now go across to the management at Union Bank, Mr. Rajkiran Rai. They declared their numbers earlier. The management is now with us. Good morning. Thank you so much for taking out time for us. Can you talk to us about the quarter that has gone by, what essentially happened, what were the slippages specifically?
Yeah, one redeeming thing for this quarter is the credit growth is back. From September to December, in this quarter, we have grown 5.5%. Whereas the first half year, we could not register much credit growth, but this quarter we have seen that. And going forward, this will stabilize and will strengthen further. Plus, we are able to strengthen our balance sheet by bringing down the gross NPA and net NPA further. The stress book has come down substantially. So the net interest income has gone up by more than 8%. So I think this was a very, very stable quarter, and the slippages have moderated to a great extent. And the running rate on NPA has stabilized around 3,400 crores. So I think there are multiple things in this quarter which gives the future guidance, and we can safely predict the future based on this quarter.
So your advances have grown. What are the pockets where you're seeing growth currently? Are you seeing demand coming in from fresh or maintenance capex cycle?
Actually, we always had 10%, near 10% growth in the RAM sector, that is retail and agriculture, and MSME also has picked up growth to about 6%. So this area we were growing otherwise also. The missing piece was the large corporate. Now we are very happy that the large corporate also started picking up. So we have about 25,000 crores of sanctions which are to be dispersed. The major components here are infra and NBFC at this point. But then we have seen actually at least 10 sectors where we have sanctions of different sizes, including textiles, chemicals, multiple areas. The major sectors have been NBFC and infra this quarter. And the working capital utilizations are going up. We have nearly 70,000 crores of limits which have to be used, including line of credits. So we have seen attraction there also. So I think that gives us the confidence that the large credit growth will be picking up in the coming quarters.
Good morning, sir. So just taking that point further, if there's going to be a hike in capex, how is Union Bank going to benefit from that? Where are the disbursements and advances going up?
Yeah, on the infra side, it is actually the capex cycle actually. Mainly it is on roads. See, one very good thing which is happening on the road side, which didn't happen in the earlier cycle, is the completed roads are getting refinanced and getting sold. Even the ownership changes are happening. So this is a very good development for a country of our size, looking at our infra needs. This was very important. This model is very important, that the completed roads where the revenue streams are stable, the new investors come in and take out of the book of the construction company. And that is one good development. And the banks are really refinancing at a much lower rate, completed projects. That is one very good development. Similarly, on the power sector also, now the generation side, we are seeing the traction back. And what we have seen is the textile. Textile, almost every big company is expanding because the export orders are very robust and they are having very good orders. So every textile company we know is expanding. So the capex is really happening. We are also seeing it in steel and related products. So there also the capex is happening. Maybe it will take time to reflect in our books and have an impact. But then we have already seen this happening.
Now, if you look at the fine print, the capital adequacy is up, right? Are you going to prioritize growth this time? How are you going to do things differently this time around?
Actually, when it comes to infra, the earlier cycle, we have learned a lot of lessons. I think that has all gone into the processing now. And a better risk management practices are there now. Today, for a project which comes into our bank, gets processed in a totally different way. The sufficient equity from the promoter is ensured. All clearances from the government. That is where we were stuck in the earlier cycle, environmental clearances, land acquisitions. Today it doesn't happen. Actually, we enter these projects or finance these projects only after all the clearances are in place. And much stronger corporates are in this space now. So they have adequate capital to put in, and they are completing projects on record time and getting bonuses. So that kind of like ecosystem has evolved now. Similarly, on working capital assessment, we have a better monitoring mechanisms today. There is a lot of technology into it. There are better monitoring mechanism so that the diversion of funds, which was order of the day earlier, where people used to take out money or use for different purposes, that doesn't happen anymore. So corporates have learned their lessons, banks have learned their lessons. Today, the funds are used for the right purposes, and the risk management practices are very, very robust. And there is a lot of technology to monitor the utilization of funds today.
Mr. Rai, also tell us about the outlook on the asset quality front, because it seems like things are looking better. Your GNPAs, your net NPAs are improving, provisions as well are coming down, and your credit costs are falling. So where do you think this number could settle, your overall asset quality, and what's your near-term target?
Yeah, actually, we have projected in the beginning of the year itself, on the gross NPA side, we would like to be close to 10%. I think we are well on that way now. At around 11.6, we have already brought the gross NPA down by almost 200 basis points. Similarly, net NPA, we wanted to be below 4. That seems perfectly possible now. We are just above 4, and maybe by March, we'll be below 4. And it is happening by both the ways, by recoveries and also by extra provisioning, since we have a cushion. And the credit cost has substantially come down. If you look at the first 9 months, credit cost is already 1.7. And next year, the credit cost will be something in the range of 1 to 1.5, because most of the provisioning is getting completed now and the slippages are coming down. So that gives us a cushion, because we'll have much higher profits. And these profits generate the capital needed for growth. So it is a positive cycle. So I think we are on a sweet spot now, ready to support the growth, which is visible everywhere.
All right, we'll let you go on that note. Mr. Rai, thank you so much for sharing with us the outlook for Union Bank. The stock is down about 2% in today's trading session.